For more than 2 decades, the global financial system has been preparing for a transformation, not through headlines, not through hype, but through policy papers, working groups, and infrastructure quietly built behind the scenes. Crypto, and specifically XRP, did not emerge by accident. They emerged as part of a long-term global modernization plan. By the early 1990s, global institutions had reached a critical conclusion. Money does not move like the modern world. Cross-border payments were slow. Settlement took days. Liquidity was trapped in nostro and vostro accounts. Capital inefficiency created systemic risk. As globalization accelerated, the financial system could not keep up. This wasn't speculation. It was documented by the IMF, the Bank for International Settlements, and central banks worldwide. The internet solved communication. Data could move instantly across borders, but value still moved on legacy rails built decades earlier. Global institutions understood something critical. If the world was becoming digital, money had to become digital too, not as speculation, but as infrastructure. Purpose-built, interoperable, and secure. A value layer that could operate at institutional scale. The 2008 financial crisis wasn't just a banking failure, it was an infrastructure failure. Liquidity froze, trust evaporated, settlement risk became systemic risk. From that moment forward, global institutions accelerated efforts to build faster settlement, transparent liquidity, reduced counterparty risk, and digitally native money. Bitcoin proved one breakthrough idea. Value could move digitally without intermediaries. But institutions quickly realized Bitcoin was not designed for global settlement, regulatory compliance, monetary interoperability, or institutional transaction volume. Bitcoin was proof of concept. The system still needed purpose-built financial infrastructure. Infrastructure that could meet real-world constraints. This is where XRP enters the picture. XRP was designed specifically for institutional use. Near-instant settlement, on-demand liquidity, no pre-funding, neutral bridge between currencies, 24/7 operation across jurisdictions. Ripple took a different approach. They worked with regulators, banks, and institutions first, not retail markets. A bridge built quietly to modernize value for a digital world.